Hello, batch of FinLearn Academy and fellow traders. In a weekly recap, let's see what lies ahead for the indices or the broader markets. Nifty, what we have seen today is today's price action is part of the last 5 days of consolidation. If I see the last 5 days of consolidation, once it gapped up above this, today it just touch and go over there. So it's in a stuck in a very narrow range of on the upside. This range is around 18,435, and the downside it is 18,241. So once the market are stuck in this range, we just as a trader we wait for a breakout. Let prices go past this high. Once prices are above this high, a breakout is confirmed of this 6 days of consolidation, and we should see 18,600 on the upside. What if this consolidation breaks on the downside? If it breaks on the downside, this island reversal gap over here is going to be your immediate support level in the short term. So that puts the markets as buy and buy on dips. So at these markets where they are moved up too fast and covered 18,400 odd levels, let's see what should be our cutoff point for us to remain on the long side. Right now, yes, we remain on the long side, and current market is consolidating. So the minimum we use is the 20-day moving average on the daily price chart. The 20-day moving average is a key indicator for us as far as the short-term swing is concerned. So if you notice, along this support, around this gap, plus your 20 DMA is coming around 18,000. Right? So, and once the 20 DMA which has been crossed at 17,200, market has sustained above that. So till the 20 day is not breached, markets are likely to be positive. It's buying the dips with a cutoff point at 17,900. And see, consolidations turns out to be either a clean breakout or a tricky one, which means can it come down to here and again try to break this? Yes, that is possible. So as a trader, going for a staggered buy, once it crosses this high, see if any high which has not been crossed for a period of 5 to 6 days, once prices break that, then you see a good move in price. So how much we can expect on the upside? So our support levels is anywhere between 18,100 to 17,951. Breakout level is the recent highs which it made around 18,400 levels. And once it crosses that, we should see 18,600 on the Nifty. And another thing which guides us on the upside is also our Bollinger bands. You might say, yes, it's too stretched, but at the same time, we don't have any confirmation price from the price action. So if you see, at every rise, prices have touched the band on the upside, and the Bollinger band over here is around. Let me show you. See, the band is around 18,587. So approximately, let it put a round figure to it, 18,600. So right now trading is about the last low, breakout above the recent high, and we should see index reaching 18,600 levels, which is also coinciding with the all-time high. If you see 18,620, right, and the upper band is also over there. So the markets today, when it was trading, you must have thought, let's see the closing. But when we saw closing, we saw a candle with a big tail on the downside. We suggested that there was a buying power even today. So this gap and the 20 DMA around 18,000 odd levels is your key support to trade on the upside for higher levels around the upper band around 18,600. On the same parameters, let us see Bank Nifty. Bank Nifty is also in a consolidation mode, but unlike Nifty, Bank Nifty has crossed the all-time high, which is at 41,800. So once a high has been crossed, that itself becomes a support level, and you have a cluster of support. The role reversal from all-time high, plus you have the last low, the gapping up candle, and the 20-day moving average, which is around 41,600 to 41,300. So this is your support band for Bank Nifty. And as long as we trade above the middle band, it's like creating long positions on dips with a stop loss. And till markets indices, both Nifty and Bank Nifty, are maintaining above the 20-day moving average, we would consider as the swing and the short-term trend. Medium-term trend is already always up. Even the short term right now here is showing a sequence of higher lows and higher highs. So till this low is not breached, the bias continues to remain positive and creating longs on dips. You clearly know where your risk management level is. It's the 20-day moving average for both the indices. So that's we have covered the broad indices, both Nifty and Bank Nifty, in a weekly recap.